Join us now, Michael Saylor, the company's executive chairman. 3% of all the Bitcoins that will ever be minted, 628,791 owned by Strategy, but who's counting?
Yeah, thanks for noticing. We see Bitcoin as digital capital. The business model of the company is to accumulate the digital capital and then issue digital credit, like preferred stocks, against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors.
And the latest preferred stock offering, it was going to be $500 million. And why not do $2.5 billion at this? So 5 times as much because of demand?
You know, my first IPO was $48 million in 1998. This year we did 4 IPOs for a total of about, the first was $500 million, $500 million, $1 billion, and this is the largest IPO of the year, $2.5 billion.
Michael Saylor talks Bitcoin, wealth, and the future of money, why he's all in. Let's dive in and find out.
Is there ever too much Bitcoin for you to own? Like if you could own all of it?
I don't think we'll get all of it. I don't think in the range of 3 to 5 or 3 to 7% is too much. BlackRock is.
No, I just wonder. I was thinking about the mental exercise of if you could actually own all of it, like if you would even, bless you, if you would want it.
Well, you know, we started and we had very little, and Bitcoin was 10,000, and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it.
Right.
So as a practical matter, what we're doing is we're monetizing and powering up this.
Oh, I totally get it. I just mean, if you owned all of it, would that change the entire behavior of Bitcoin?
Yeah, we wouldn't want to own all of it.
I wouldn't want to.
We want everybody else to have their piece.
So.
The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding. And companies like MetaPlanet in Japan and Capital B in France and Smarter Web in the UK. And then there's a raft of them in the US, Anthony Pompliano's company, you know, and 21. They're all capitalizing. The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us. Well, I think the key to keep in mind is Bitcoin is demonetizing foreign real estate, private equity, public equity, other sorts of store of value assets everywhere in the world. 20th century physical analog assets are becoming 21st century digital assets. These companies like Apple and Microsoft, if they could buy the S&P index, they'd be better off. It's against SEC rules. Right. If they could buy each other's securities, if the Mag 7 could buy each other's securities, they would be better off. That's against SEC rules. The only security Apple can buy is Apple stock. And what do? They buy their own security. So in general, if you're trying to create shareholder value, you don't want to park it in a fiat currency. You want to park it in a tangible asset. But gold and real estate don't make sense.
Did you ever see, you know, what we're talking about?
Bitcoin may be heading into a short-term consolidation phase as expectations for a September Federal Reserve rate cut rise sharply. Following weaker than expected U.S. labor data, the market now sees an 80% chance of a 25 basis point cut. This shift in sentiment has sparked renewed optimism in the crypto space, especially for Bitcoin, which briefly dipped but remains within the bullish setup. Analysts believe that despite short-term volatility, the groundwork for another rally could be forming. The disappointing U.S. jobs data, particularly July's addition of only 73,000 jobs, well below the forecasted 106,000, has deepened concerns about slowing economic growth. Revised figures for May and June also painted a weaker labor market than previously believed. Historically, such economic signals have prompted the Fed to ease monetary policy, often sparking risk-on moves across crypto markets. While Bitcoin slipped around 2% to 112.7K recently, analysts like Tom Lee from Fundstrat view this as a natural correction within a larger upward trend. At the same time, caution remains. Arthur Hayes, former BitMEX CEO, warns of potential macro risks, such as new U.S. tariffs that could impact sentiment in the coming quarter.
Here's the way to think of it. Bitcoin is a digital commodity. It's about 50 volatility, 50 ARR, and you want to hold it forever, a 50-year duration asset.
Okay.
If you want amplified Bitcoin, MSTR, the equity, is amplified Bitcoin. People want 2x Bitcoin exposure. The options jockeys love this. The derivatives traders love this. If you want structured Bitcoin, that's Strike, STRK. We give you like the 80% of the upside, and we give you 20% in a structured dividend, and then we give you principal protection. That's for people that would prefer to invest in hedge funds or S&P indexes.
But you're using the proceeds to buy more Bitcoin. You just keep adding on to how much Bitcoin you have. And your average price is what, 73,000?
Yeah, we'll sell a credit instrument like Strike, and we'll buy Bitcoin. So we're taking the volatility and the duration and the upside for our equity investors, and we're giving a structured instrument to the credit investors. Now, Stretch, which is our latest IPO, and I think the most exciting product, it's like Treasury Bitcoin. It's for someone that wants monthly dividend, they want principal protection, they want the lowest volatility, they want a high yield savings account, and it kind of competes with money markets or with treasuries. And so what the company has done is we're taking this pure digital capital asset that's got a lot of performance but a lot of volatility, and we're refining it into securities that conventional investors can buy depending upon their risk tolerance and their duration interest.
On July 4, 2025, something massive shook the crypto world. 80,000 Bitcoin, untouched for 14 years, suddenly moved. These coins came from 8 separate wallets, each holding 10,000 BTC from the early Satoshi era, a time when Bitcoin was mined using regular computers. Their sudden activity raised immediate questions. Was this a long-dormant investor reawakening, a hacked wallet, or something far more advanced, like a response to a growing quantum computing threat? Rather than going to exchanges, the Bitcoin was transferred to newer SegWit addresses, widely considered more secure against quantum-based attacks. This shift has fueled speculation that the wallet owner is either upgrading security or reacting to whispers about quantum technology's ability to crack Bitcoin's older cryptographic systems. SegWit addresses help protect against the exposure risks tied to the older P2PK formats, which were used for these wallets back in 2011. Just 10 days after the initial move, 28,600 BTC were sent to Galaxy Digital, with around 9,000 sold shortly after, sparking a brief 5% drop in Bitcoin's price. Meanwhile, OP returned messages on the blockchain surfaced warning of legal possession and demanding proof of ownership. Whether it's a scam or not, one thing is clear. This whale just reminded the world that Bitcoin's past still holds immense power and mystery.
If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.